Ladies and gentlemen, welcome to the Fintech Sunday show. I'm not sure, but that's on me. You know, we were late a couple days, whatever. We had to get the boys together. Tevis, how are you?
I'm doing good, man. Undisclosed European enucleation. It's 1 a.m. for me right now, so this is gonna be fun though. I'm excited for this.
Roy?
Yeah, glad to be here, celebrating an all-time high. So Tanner saw it fit to be extra late by days and also start at least a minute late too. So how else would we celebrate?
But we're all here celebrating the same thing. So that's kind of exciting. Sofi has not hit a 52-week high. We've definitely been on quite the spree for the last few quarters. But this time's a little bit different. This week, we surpassed a price that I haven't even seen as a SoFi shareholder. Very few people have seen as a SoFi shareholder just because it was a quick pump during an intraday move. But essentially, what we're talking about is the all-time high move of SoFi stock getting to 29.51, surpassing the last all-time high of 28.32 or something along these lines, or 28.21, something like that. So we have greatly passed it. And even in the after hours, we're at 29.55. What are your guys' thoughts?
We knew that it was possible. We knew it was likely to. We had a $25 price target, but that as we began not the beginning of the year, but after April especially, stock was going up. It was getting attention and attraction. It's like, okay, might we hit an all-time high this year? So here we are. And that's always a fun moment when you look at the stock and like, okay, nobody has lost money on the stock except the shorts.
They definitely have lost some money. I mean, we lost a couple soldiers along the way. That was true as well. Like, definitely some people made it out. Not everyone made it out unscathed. Okay, some people had sold a little early. But overall, we're here now. Most people, at least in the last few quarters, have made a lot of money. A lot. Like an unprecedented amount of money. You know, if you are talking about saving money in an account, making a really high amount, 3.84% in a high yield savings account. If you're at the regular banks, I mean, you got to fight for those types of rates. But even if you have it in some sort of risk-free rate or CDs or something like this, you're not getting anywhere near 250% that we've seen just in the last year in a lifetime in those accounts. In a lifetime. Let alone if you put it into the S&P 500, you're making, what, 11% maybe on average? Maybe in the last couple decades, 14, 15%?
Yeah. I mean,
if you
that
pick
can work for
stock,
some, but that can work for some, but when you get to know individual investing, long-term investing, what works for you guys, I don't think it takes time, it takes intentionality, but I don't think it's crazy to think that you can outperform the S&P 500 on a consistent basis once you figure out what works for you.
Yeah. I find a lot of what's kept me through this position is the community and being able to do due diligence across the entire retail base. Like, obviously, we have much less tools than the institutions that are potentially shorting our stocks or trying to pull information from other areas that we don't have access to. Very expensive information. That said, with a pool of just fanatic investors that are checking careers pages and downloading website traffic and credit card information and scanning through the websites and the app code and all of this all this stuff that we can get on SoFi to underwrite and make sure that we are, doing the right thing here, especially during the times where things got very, banking technical. We had to rely on a few names of experts that were in the investment banking side to explain some of the processes that were happening at SoFi. But through all of that, we've made, really good amounts of money betting on this name. Now, obviously, that leads to the question, where does this go? And I think that would be a great topic of discussion is, what do you guys foresee for SoFi for not only the rest of the year, but for all of 2026 and then beyond. And I'll start with I'll actually start with, sorry, I was going to say Tevis, but now I'm actually thinking about bringing Steve in.
There he is.
Why are you late, Steve?
Because I wanted you to think I wasn't coming since you already moved it 3 freaking times.
I did think you were not coming.
Exactly.
We were just talking about how much money we've made on SoFi.
Well, let's
You
not get
included.
greedy because let's not get greedy.
Even the Bears made money, like Steve.
Tanner,
Bear,
was your mission successful?
Sorry?
Was your mission successful?
We're not talking about that.
No, I'm just asking a simple question. Is it yes or no?
Not fully, no.
All right. That's all I want to know.
I knew he was going to start the conversation with that too.
But what's it called? So aside from being derailed, where is SoFi going over the next 12 months? Tevis? How do you go about thinking about this?
Yeah, sure. I think we should split it out into phases of time, like short term, medium term, long term. Like long term, I think we're fine because nothing has fundamentally changed, and you have a high correlation between underlying company performance and stock price directionally going in lockstep. Medium term, let's say through the end of
what is medium term?
Through the end of 2026.
Okay.
I think that that same correlation is going to be not as strong as long term, but it's still going to be there. And so, I just made a video a few days ago and I said that my price target for SoFi is $45 by the end of 2026. And I said, like, a lot of people might be like, oh my gosh, that's such a bearish take. That's only 60% or whatever higher from here.
Oh, only.
And yeah, exactly. Right. But that is taking into account the short term. And I think that the company fundamentally is going to keep executing. Loan platform business is going to keep doing well. You've been seeing a lot of spend in SoFi sales and marketing. You've been seeing the Josh Allen partnership. You've been seeing, all of these pieces of news, the website traffic, the app downloads, everything that points you in the direction of high member additions, which means that when you pair it with all the other pieces of news around crypto, around the product launches for the remainder of the year, the management team is obviously going back on the offensive. And this is a place where, they've been on the defensive for a long time now, with the macro being where it is. And so now that the macro is supportive of the environment, I'm going to go back to Anthony Noto's words at the beginning of the year. He said, look, it's the best environment we've had in the last 7 years or 8 years since he's been here. And that's the thing that I'm really excited about, because I think that's what maybe somebody who's getting into SoFi at $29 doesn't, or $25, whatever, the price discovery phase of SoFi, because for every seller, somebody who bought at $5 and sold at $30, there's obviously a buyer, somebody who's buying at 30, trying to hold to 60. And so for those new layers of people that are buying in, they might not realize, what management's ambitions are, what management's goals are, what management's plans are for this company. And so I think that from the execution layer, from a company fundamental perspective, that's going to be consistent, if not accelerating. The only reason it's $45 instead of like $65 is because I think we're due for a macro pullback. And I think that macro pullback is going to come sometime maybe towards the end of the year if we don't have a Santa Claus rally this year, or maybe in early 26, but some type of event that takes the stock down $5, $6, maybe more than that, and keeps it there for a while. And that's healthy for the market. You need that, because this thing went from $15 in January down to $8 in April. And yes, it did go all the way down to, I think, like $8.50 or $9 or something like this, and then all the way up to $29. And so you need some type of cool down, let's say, for it to prepare for the next leg higher. I think the positive right now is that we entered some price discovery territory, that people are discovering this, hitting their screeners for the first time, and they're like, oh, SoFi. Wasn't that Chamath SPAC back in 2021? Yes, we've come a very long way from there. And so I think that the short term is going to be rocky. But then when you look at medium term, I think we're still going to surpass that and go higher. And, $45, I think, is still like, if I make 60% on SoFi next year from here, I'm very happy with that. I'm sure the management team is as well.
Roy, how do you foresee pricing this stock out, by the end of 2026, for example?
Well, I know it's more mid of 2026, but I'll echo what Tevis said. 45s are in play. Of course, that is reference to the C-suites, PSUs, based on stock price action, holding at a volume-weighted level for 30 days. So, they have to do it before then. So that's people might say, oh man, over, a little bit less than 12 months, or like 9-10 months, going up only 60% is what the one thing that gives me a pause is, like Tevis said, things not just on SoFi's ticker, but a lot of tickers are a little bit overheated, a little bit too much glee in the markets. I'm feeling it too. My portfolio is looking pretty good. I think all of us holding SoFi, it's probably looking pretty good. But if there's not a big macro pullback that's sustained for a little while, I think that very much there's a high probability of them getting the 45s, or at least being very close, which I don't mind as a shareholder.
Obviously, that's what management wants to do, but how does Noto try to push the stock? Because it might be 9 months away or even less than that, but he needs to be there by March, essentially.
Yeah, it's two things. So one is continued excellence, on the operations front, as they continue to have earnings calls, as they show massive growth in the loan platform business and other elements of SoFi. Maybe not even having like 40% year-over-year growth, because that's pretty much harder to do with these comps. But showing excellence there, and then also trying to cast a vision of SoFi is more than just a bank. Now, right now, it is being valued at more than even a fast-growing bank. But I don't think that the market fully believes what SoFi is saying about payments, about crypto, lesser extent AI. So if the cadence actually kicks back up, and he's able to paint this narrative, which I think is true, that SoFi is more than just a stupid bank, and also banks are pretty cool right now with regulation. That is might be beyond macro what actually pushes that.
Steve, you have a different opinion than the two of these guys. I'll let you say it for yourself. But where do you foresee SoFi getting to? Do you think that they get to 45 for the PSUs? What do you foresee happening for the rest of 2026?
I mean, I don't even know how we can say rest of 2026 when we haven't even reached 2026 yet.
Yeah, but how do you ever try to guide out, like, oh, I'm going to continue to hold on to this company for the medium term, or do you just hold on to companies for 3-month periods at a time? Like, how do you model that out?
I mean, look, I've held. When did Meta go IPO?
2013.
It was 2013. I thought it was like 2011 or something like that. But 2013, I've held Meta since then. So I hold stocks for a long time. But at the same time, I didn't think SoFi was going to be here right now. So I'm the oddball out in the group. I thought it was going to be a challenge getting to 20 this year. So we've obviously surpassed that. And I think rate cuts are going to be a huge tailwind for SoFi. And I'm expecting a triple beat in Q3. And that was before rate cuts happened. I had said that in my article on Seeking Alpha. Tevis, what are you drinking back there that's got you so giggly? There's something behind you. What is that over there?
Don't you worry about that, man. I'm in celebration mode. All right. And
that's fine. I was asking what that bottle is. Can't make the label out from here.
I don't even know. It's a whole bunch of stuff.
Yeah.
Anyways,
what bottle? There's bottles. You got to pick one.
No,
don't
the one
get
in the front,
distracted, Steve.
Looks like scotch, but
don't get distracted, Steve. Continue.
Look, I think SoFi is going to do really well on a fundamental basis. If it keeps going, it's 50-50. I mean, you could have a lot of people annoyed that they missed out on Robinhood that just end up piling into SoFi now because of upward momentum. And that could just drive it to 45 or 50 alone. So who knows?
What does that mean for the multiple? Because I think that's what people are pointing to is like,
I mean, I don't know how anybody can point to that when Palantir trades at 110 times earnings. I'm sorry, sales. 110 times sales. Like,
but they are not the same.
I'm just saying.
Thank you, Tanner.
Like, I love SoFi, but the one thing that I always have to keep reminding myself is right now we're getting rate cuts. If there's the opposite side of that and we get rate hikes, SoFi is going to feel that all the same. And I'm not saying anything like that's in the short term, but investors are smart enough to realize that they are still sensitive to macro changes. I'm not even sure Palantir is. Like, I'm not sure Palantir is. I'm not sure NVIDIA is, because the swing of artificial intelligence is just so huge that that's giving these companies premiums. And NVIDIA deserves an even bigger premium. But that's the part that I'm trying to get around right now is like, I'm looking at SoFi's multiples, and I think that they are going to have growth that no one is expecting. Like holding above 30% growth for years to come, or could in great environments. That's super exciting. I love Noto's goals. Like, if he really does think that we're getting to like 50 million members, we have a very exciting future. But that's also hard. And people will price in the execution of that. And what does that mean for, Wall Street to change their prices to try to, like, I mean, Dan Dolev's bullish. He's probably one of the most bullish people in the markets. He changed his price to $30 a share. Like, that's 31. For 12 months out. He put the price that it's going to be tomorrow. Like,
yeah, $31 up from $26.
Yeah, but that's no move, like the.
Sure, but he's like, if analysts are making moves that seem like no moves, I have more trust in those analysts, because you have analysts here that are like, stock went up 50%, my price target goes up 75%. And you're like, what was your analysis before? Like, in the case of like something like Nebius, where they sign a massive deal and it completely changes their valuation, I understand it. But in many cases, they're heavily discounting certain things, which comes around to bite them because their analysis is way too low, and some YouTuber gets it more correct than they do, and then they're like, well, my price target is now 4 times what it was last year. And like, you're an idiot, but like, if you make micro adjustments, then it signals to me that you actually have some type of model, and all the new pieces of news that are coming out slightly tweak that model, which account for little changes, not big ones.
Yeah. And then I'm just trying to price out, on a segment level perspective. And I'll put a video out for this on the way I'm thinking about it. So I'm just talking like, I don't even have notes in front of me. I'm just going off. Financial services is going to be a skyrocketing product line. If he can get to, Anthony Noto said they want to get to 2 products per member, and they want to get to 50 million members. That skyrockets how fast people are assuming their growth. If you are predicting that they are going to do growth somewhere like what they've done previously, and he can actually hit those goals, you are going to be drastically off. I mean, going from 19 million or 17 million products to, almost over 100 million by 2030, that's insane.
Yeah.
But how do you price that? That's the thing that I'm seeing. And all I'm seeing too is not to pick on Brennan here, but it's just very common that whenever a stock goes up, you always have to continuously find a multi-bagger. So people just increase the price. Like at 7, people have said, when we get to 20, it's celebration time. Now that we're at 30, people are going, we're going to 100 by next year. It's like, this can't be a triple forever because earnings aren't tripling. So that means margins are expanding, which they are. And I hope growth also increases in price. But until I see the growth expand, I think that we get to 45 after 4 quarter prints, which would be, July or something like this. That I think is a very reasonable assumption. The multiple says it can do that versus comps, but I think the calls for 70, calls for 80, calls for 100 plus is just saying a number at this point.
It's a sign of the market where we are right now in the cycle, right? Like the price targets get pumped like nobody's business, and I come out with a $45 price target, and they're like, "No, you're not bullish enough. This guy's a bear." It's just like, dude, like, take it easy, because if you had been following and watching for a while, and by the way, thank you for the $10. You would have had a multi-bagger on your hands. I mean, sure, it's not the likes of, the Robin Hoods of the world and the Palantirs or whatnot that did like a 20x in a year or whatever crazy amount it was, but it's still what, like, I think my lowest purchase was $4.50. From there, it's like, what, a 5x, 6x, something like that. More, I think, even. So you would have had something on your hands if you, number one, believed in the fundamental thesis, number two, had the patience to hold it, and ultimately, number three, seen that through, like continuously done your homework and trusted what you held and stuck to your convictions. And I think those are all lessons that are fundamental in actually making you a good long-term investor. And this was a perfect case study in it, because it took several years for it to play out and was misunderstood by the market. And when it did play out, it played out in a big way. And now people are saying, when 100? And it's like, well, you might have to wait for a little while longer.
Yeah. I mean, we had a 263% gain in the last year. Like, yeah, I don't know. We will still continuously see growth, especially if like 3 rate cuts by end of year is not fully priced in. There's about an 80% chance that happens. That still leaves room for upside. We still have many, many short sellers that are, going to have some level of squeeze as they close out their positions, because if they don't close out their positions, it's going to be a long time holding through higher and higher prices before they ever get back down to where they potentially opened up those shorts in the first place. So, yeah. Noto says that we sound bearish. I don't understand how saying that between now and 12 months from now, or even less than that, more like 10 months from now, I think there's a 50% increase in the stock.
Did Noto really say that?
No. Just someone that called themselves Noto in chat.
Yeah. Or it could really be him, but yeah. No, I mean, it like you said, it's a sign of where we're at in the market. And usually that does signal a local top. I think we have a little while longer to go, but I'm never great at predicting those things. If people are dissatisfied with 50% gains in 12 months, there's something wrong. So a lot of greed, a lot of euphoria.
Yeah. But so no one's planning on selling any shares here?
No.
Is anyone planning on writing covered calls here?
I mean, I may not be a shareholder after Friday. We can say that.
Okay. September 26th covered calls?
That's right.
What's your strike? You telling?
I already told you what it is.
You didn't tell the audience.
30.
Maybe.
I
And
wrote
you
them
did this-
on Thursday morning. It was either Wednesday or Thursday morning. I think it was Thursday morning when it was at like 27.50. I'm like, it's not going up 10% in freaking 6.5 trading days. And then next thing you know, it's at 29.50. I'm like, what the hell?
You did this on your full position?
Yes, sir.
So you'll let them go then? You're not rolling them?
Actually, no. There's some in a joint account, but let's say 92% of the position.
Yeah. Are you going to roll?
I mean, in all seriousness,
He
Be
is,
honest.
dude. He is. He
Hold
is.
on,
Like,
hold on,
I get
hold
it.
on.
I get it for the content, but like, come on, Steve.
No,
We
what
all
content?
know you're rolling.
No.
We all know you're rolling.
Hold on. Originally, I was like, I'm going to have to roll my way out of this or just get screwed the way I did with Palantir. But then I start thinking, I'm like, you know what? If they get called away and then we get a retracement, that would be freaking great on one hand, because now I can rebuy it at a much higher price point, and I can sell some things I've been holding that have been underwater and offset the tax consequence from the original tranches. I got to run the numbers, but we'll see.
Yeah, it's going to be interesting as well, like because we're getting into the tax loss harvesting months
Yep.
of the winter period, and so what you'll find is that a lot of stocks that have been beat down are going to be beat down even more because people are going to sell them to harvest tax losses, and that's not going to be the case with SoFi. But what you could see is you could see a lot of people taking some gains off the table to offset some of their losers. Like for example, so for myself, one of the things that I'm not doing is I'm not writing covered calls. I'm not selling shares, but am I selling leaps? Well, I have a bunch of leaps that are coming due in January of 2026. So I gotta, put up or shut up, either take assignment or sell the leaps. And so I'm not going to have that position anymore. And how do I deal with the time decay? Especially because the market is so toppy. And just in my personal opinion, can it go higher? Yeah, sure. But like, do I want to really risk it for an extra couple of dollars on top? Maybe for some, but definitely not for all. And so, and this is not just a SoFi specific thing. This is across the board. Like I have HIMS leaps, I have Nebius leaps, I have BMNR leaps, I have SoFi leaps. And so I want to be able to cut a lot across the board because they're all severely inflated right now. I mean, I bought BMNR calls and they're up like 100% in a couple of weeks. And I'm like, okay, cool. Thanks, I guess. Like I didn't buy them today for tomorrow. I bought 2026s and 2027s. Same thing with SoFi, right? I have $10 call options for SoFi, which are doing very well. And so I would take those off the table, but not the shares.
I wrote covered calls for next Friday. $33.
What strike?
33.
33. Okay.
Yeah.
Yeah. I had written 31s for this week, and I felt, it's like, okay, I think that we'll set a new all-time high. 30 is not strong resistance, but it is resistance. And I was like, they'll probably be pinned right underneath. And we were right there. So did cause me a little bit of sweating, and I was prepared to roll, or actually probably just redeem at that point. So yeah, I'm gonna have to look. I'm not sure what strike I'll sell them this week, but yeah, I think 33 just to cause some pain and teach some lessons. So maybe it'll be 34. It's like Price is Right.
33 is the word on the street. Yeah, no, I wrote covered calls on practically everything I had. So yeah, collecting some premiums, or at least not on everything I had, but on all the popular names, including BMNR, by the way. Covered calls on BMNR.
This is good.
Yeah. And so far out that I don't know if they'll close, but it's BMNR, so we'll see. But I think I did like 85s for next week. I'm just collect a little bit of premium, enjoy it.
Oh yeah.
Okay, let's go to this donation really quickly. Onita says, do we expect any pending news, i.e. crypto, new AI takeover? They're hinting at the comments from Noto saying that they might use the capital that they raised from the dilution to potentially acquire an AI startup. Not a blockchain name, but an AI startup. Blockchain news, new mega LPB deals, loan platform deals, promise 10 Galileo deals, level 1 options, a new way to do transactions, etc. I mean, those cover all the big names of what we are expecting. Do you guys think we're going to hear anything? What do you think of Tevis?
I think we're gonna have an acquisition. I don't know if it's gonna be this year or maybe early next, but I mean, we still have a lot of time on the clock for this year, man. Like, yeah, we're in the sort of last quarter, but like, there's the full time on the clock. And so, if Noto comes out and he does buy a startup or something in the crypto space, and they do launch crypto in earnest this year, like, yeah, there is more room on the upside for SoFi. But again, like, it's a balancing act between those two things I was talking about earlier, the fundamental piece and the macro piece, because if they have great crypto news and the macro sells off because of some global war or some other bullshit, like well, that's not going to be great for the stock, right? So regardless that it's good for the company. And but I do like, they have been dropping the hints that they want to roll out crypto in a bigger way over the remainder of the year. And I think there's a lot of evidence to believe that that's going to be through an acquisition, just given how big their ambitions are for crypto. I'm not sure about the AI piece, although Noto did mention in the last earnings call that AI, along with crypto, are two of the biggest technological revolutions that we're sort of undergoing right now, the paradigm shifts. So I wouldn't be surprised. But I think that, interestingly enough, almost like going inverse to logic, if they announce an acquisition right now at all-time highs, the stock is going to react more favorably than if they were to announce an acquisition at like $11, because you have this like hot hand fallacy where what goes up seems to continue to go up and people continue to buy it up because they think it's going to continue, right? So anyways, I do think that we're going to get an acquisition. At the very, very least, we're going to get a bigger rollout of crypto. And I think that they want to roll it out all in one, to say, hey, look, yeah, sure, we have the brokerage side of the business back. We're taking you off the wait list. It's here. But also X, Y, and Z. You can do remittances off the blockchain. You can actually have crypto-backed loans. You can have all of these things that we promised you, stable coins, whatever. And by the way, we're also doing this acquisition because we want to be a leader in the crypto space. And then it's like, okay, you're over 30. Yeah, I mean, you could be over 30 on Monday, but you get the point.
Yeah, yeah. Roy, when do you think we start to see some new product rollouts? Obviously, they talked a lot about level 1 options coming in Q3 or Q4. Q3 is, I mean, we've got a few days left. We'd need to hear some news then if that's going to end up closing. What do you expect that we see next from SoFi?
I mean, I think that that's imminent. The Technisys Galileo merger, and then back ending basically on that technology, is nearly complete, or it should be complete, and that'll allow them to shift some focus on some of those long-awaited projects like level 1 options, but also a lot of new stuff as well. Clearly, they're building towards crypto, and several facets of that. So it wouldn't surprise me, in the next few months that we see something like that. Now, the AI piece, I have no idea what that could be. That was interesting and puzzling, about as much as the level 1 chain comments.
What if they do acquire a business similar to Pluto or something like this to start building out their own SoFi Cortex business? Because to me, Cortex from Robinhood's side was probably the most exciting part.
Yeah, it can be done. The problem is you have basically a much smaller audience on SoFi Invest. And so, of course, you have to tailor it to something that actually meets the interests of that audience. It's a little bit different than the Robinhood group. But Robinhood had this group that was already there, and this was just a value add. It wasn't something that they were relying on necessarily to bring more people to Robinhood. And so if SoFi's goal is like, hey, we're going to do this, we're going to make this really neat product that uses AI kind of like Cortex, and that'll drive people to our platform, I think that that's probably not going to work.
I think you think of Cortex as an investment product. I don't think that's what I think Cortex is going to be across banking. I think it's going to be just across Robinhood.
True.
And I think that that's probably what we're going to see. Maybe Cash Coach or Expenses are early signs of this, but something that is played across the entire ecosystem of SoFi as a SoFi Plus benefit rather than just for the invest audience.
Mm-hmm.
But I do think level 1 options is going to bring a lot more revenue and stickiness to the invest segment, which right now barely brings in anything.
Yeah. That's an easy layup.
Yeah. Like right now, we have actually a lot of users on SoFi Invest, but they target beginners and ETF purchases and all of these things. None of them make any money. Like even equities for Robinhood makes no money. It's all in options and crypto, all of it. So as they expand into those two segments, which should be coming in the next few months, that could, not 2x, but like multiply the amount of money they're making on SoFi Invest, like 5x.
Can I ask you guys this? Like, do you guys think that the timing, the seasonality around member additions, what with football season, and now that they're going into like million member plus quarters, or at least that's what they're targeting, we'll see in the next couple of quarters. Do you think that's at all correlated with what they roll out from a product perspective, or do you think they're two separate swim lanes? In the sense that, like, do you think that Noto is sort of pushing the team to roll out, crypto or level one options, or more benefits on the checking and savings side, just to get more money into the ecosystem because it's a seasonally strong period with football season, and like, oh, the Bills are going to go make it far this year, or the Celtics are going to make it far this year, or whatever the case may be? Or do you think they're just like, nope, business as usual, like product is ready when the product's ready, and then we're just, marketing is ready when the marketing's ready?
I think Noto alluded to this a year and a half ago, where he intimated that there were some products that they were mulling over, that they had already had in development, that they weren't going to launch until macro conditions were favorable. Which macro conditions, it could be, economic certainty, but it could also be regulatory certainty. And there's a lot more regulatory certainty. So I think that probably more than anything is what drives the cadence actually up.
Yeah, I've got no take. I'm not sure at all. But I do wonder if they're ever going to get into like prediction markets or anything, because they have such a massive sports audience. I'm personally not a hater of that product. I think that there can be decent ways that they could play it. I don't know if they will. They definitely have much more of a betting audience on Robinhood. But there is so many sports fans on SoFi. Like, do you want to try to keep them on that platform, or do you want to make it feel really much like a bank, or very much like a bank? Steve, would you use SoFi if they had sports betting, or would you keep it somewhere else?
I don't think they should get into it. I don't think they can get into it because of their banking charter, nor should they get into the prediction markets.
Yeah, I don't think. I think the SEC ruled on that they. That you can offer it. That's how Robinhood's able to offer it, even though they're a regulated brokerage.
Bro, can I just say something? If they get into sports betting, if they announce it, I swear I'm gonna be DMing Noto every single day until he blocks me, to be like, when Canada? When Canada? When Canada? I need this.
See, that's the thing. That if we potentially get into it,
that's a joke, Steve. Continue with your point.
No, when you think about banks and all that stuff, I just don't think it's a good look. I'm all for generating more revenue, but I think it delegitimizes some of the other things that they're doing, and I wouldn't want to risk that. I wouldn't want somebody to feel like they shouldn't use SoFi to refinance a student loan, or to take out a loan, or to do something else because of the negative stigma that a prediction market or a sports gambling product could put on it. So I just would rather stay away from it.
Yeah, we already know what Roy's going to say. He just had to drop out for one quick second. Yeah. Anyway, we already know what he was going to say. He would like it, but just on a separate app. That's a little callback to what's it called? The Robinhood time whenever they put it out, because he was not a big fan. But then, everyone likes to dabble a little bit in prediction markets. Which, by the way, I absolutely would. Like, I mean, I haven't just yet because it's not an easy crossover. Like, I'd like for it to be built in. I don't want to fund another account. I don't want to have to set up an account somewhere else, fund it, and everything like this. But if it was just in the same app of the things that I was already using, you don't think I have, small takes on if the Fed's going to cut rates, or if, Trump and Elon are going to make, like, I wouldn't do the sports betting side, but I would still do, interesting life events and try to make some,
you mean
make
like
some money on that. Yeah, it's the same as stocks, right? Like, if I have an information edge, that's what I would do it on. I wouldn't do it on if I didn't. Like, if I was just guessing or gambling, I wouldn't play it. But, yeah. All right. And by the way, that most recent Netflix boxing match that we ended up seeing, I would have lost every single one. I was wrong on all the calls, 100%.
It's actually
Hey,
it's
I said Crawford was going to win. You guys don't listen.
it's I mean, I think picking Crawford, Steve, is like, it shows a lot of, I think, maturity in the game, because like everybody would have been Canelo all the way.
I'm on
Just from
record
the
picking Crawford, and I have the slips on
Yeah.
my betting to prove it.
yeah.
No, I believe
think,
you, but he was not the favor. He was
No,
like, it
I
was
said
a
on the
60-40.
next podcast, I said Canelo hasn't really fought somebody like him, even though he's fought Mayweather and some other really top guys. But Crawford had an extra 4 inches of reach, and he's just it stylistically was a bad matchup for freaking Canelo.
Yeah, sure.
So what I will say on the betting piece is it's really changing the game in a dynamic way to have events contracts where you're essentially betting on real world events, because the possibilities are actually like endless, right? Like if you're betting on a sports match, there's only so much you can do. Yeah, you can blow up your account in an afternoon, absolutely. But my point is like, these big televised events like the boxing match, UFC, basketball, American football, European football, whatever, like all of those, they have set times to start, set times to end. But like when I go on Kalshi, like if I, let's say, want to really bet of like, will Trump and Elon be friends again? I can go on Kalshi to find that. And in the process of finding that, I'll find 30 or 40 other things that I'm like, I have an opinion on this, and also this,
Have
and
you
also
been on
this.
X in the past hour?
No, that's why I brought it up, Steve.
Okay.
Um,
It looks like they made up.
yeah, no, I know. That's why I brought it up. But so the point being, it's like once you dive in there, it's like going to Walmart for like, a packet of chicken breasts that are at the last aisle, and you have to walk through everything else, and you come out with like 2 full bags of things. That's like, because everything is so relatable, right?
Yeah. No, I'm actually a big fan of the product. I just don't want to fund a Kalshi account and have, separate money over there and stuff. So not going to touch it if I don't like, if I'm not going through the grocery store, I'm not going to buy anything.
Well, so did you see this? There was this post, I sent it to Roy to talk about on Bootleg, but somebody had been like, oh, well, there goes implied volatility around earnings, because Polymarket, I think, rolled out whether companies would or wouldn't beat earnings as like a betting market for you to do. And there's been several instances where I'm like, man, what is the stance here around that gray area? Because this is getting to be insane. I mentioned on Bootleg a couple weeks ago around like one of the guitarists of Taylor Swift's band or whatever bet a whole crap ton of money that she was going to get engaged this year, like 48 hours before it happened. And he used his like real first name, and he was just buying up every contract that he could. And the point is that once you get exposure around like, hey, is Tesla going to beat earnings or not? Well, it's like, well, Tesla has like 10,000 employees. How many of those people already know in advance? And they get emails around like, oh, you can't trade the stock because you have material non-public information. And you're like, okay, cool, I'm not doing that. I'm going to go on Polymarket. And it's such a gray area.
Yeah, well, that stuff can change pretty quickly. I mean, I'm sure they can update that, but I also think it should be in Polymarket's right to offer those products. And I mean, that to some degree sounds easier to bet on than buying SoFi stock in general. I mean, who knows what's going to happen with SoFi stock on day of earnings? It's up, it's down, who knows? What's the chances they beat earnings? Very freaking high in my eyes. So, like, even if the odds are 80-20, I mean, that's a 25% gain. What's the chance that SoFi stock gets a 25% gain on day of earnings? I mean, to me, there are reasons to use those types of products.
Yeah, the point is that somebody always knows, like Mumblewick said, and somebody always knows applies to like the stock market as well, because you see a massive volume of options, call options coming in 24 hours before some big news and some random stuff like Intel, for example. Like, really?
Yeah,
Nvidia put a bunch of money in Intel, and magically, the U.S. government a couple weeks before was like, "Hey, Intel is going to be the next hot thing," and then Elon texts or posts on X that the CEO was like great and whatever. Like the whole story of that company changed in like the course of 2 weeks, coincidentally after the government really put money into it, and like that was the biggest no-brainer bet. I mentioned it literally on Bootleg. I was like, dude, this is so easy because the U.S. government is literally going to pump your bags. And that's exactly what ended up happening. And my point is, like, you don't need to be a genius to find stuff like that, because you just need to think about the ulterior motives.
Yeah, but I just think, what do you do in that case? Well, you have things like Whale Watch and stuff like this that post whenever huge bets are being made on individual companies, because that can potentially point to somebody knowing something. You do that on these prediction markets as well. You follow it if money is seeing a huge inflection point in a single 2-day period. Like maybe the report went out to earning or to the company saying, "Hey, these were our results. You keep it to yourselves." But they tell family members or something like this. Who knows? But I don't know.
And
I don't know. It's being
and
governed
those
right now
odds-
in stocks. It'll be governed one day on Polymarket and Call Sheet. But
yeah.
As for the other products, though, LPB deals, I don't know when we're going to see the next big named deal, but I do think that we're going to see way more loan platform deal volume than there is that's being announced. Okay. I think it was 50 or so plus % of total loan platform deal volume was not signed to anyone's name. That was just like we know how much Blue Owl is going to do a quarter. We know how much Edge Focus and how much what was the other one? Fortress Group is going to do. So there should be an amount of guaranteed volume that we see per quarter. However, we end up getting, twice that most quarters. So I wouldn't worry about the disclosures. Same thing with the Galileo deals. I don't think things need to be disclosed at SoFi in order for them to be happening on the back end. They're hiring like crazy right now. Noto made a big tweet saying this is boom time. Like this is the gold rush for their company. Those are very, very exciting prospects. Regardless of what they're putting out in the press releases, I wish they would do more of that, but that doesn't indicate success at SoFi, and we've been so clear about that for years. It's unfortunate. I wish we had more, but they obviously play very differently than some other companies that we follow. What do you guys think for loan platform business deals this quarter, knowing that the market had highly anticipated a rate cut? Do you think that this is something that, like, I personally think that is going to show a home run quarter?
So yes, but also the market is now pricing in more rate cuts than management had priced into their original guidance this year. And so that's even more bullish if you think about it from that perspective. If we do in fact have 3 rate cuts through the end of the year, then that's going to be very, very good for SoFi.
Steve?
We're going to have a very good year on the loan origination platform because CME Group is projecting another 50 bips coming off this year. And next year keeps moving around. They've been at 2.5, they've been at 3. So we're going to get at least another 50 or 75 bips. And it depends who comes on the Fed board, who the new chair is. Next year, you could see a full point come off. I mean, we'll see. You got unemployment going up. You're up 0.9% since the lows a year and a half, 2 years ago. So that could warrant more rate cuts to lower the cost of capital, to encourage entrepreneurship and spur borrowing from current businesses to expand. So it could be really good for SoFi.
Yeah, I think so as well. I think so. What else is there for quick?
Maybe you can
SoFi
throw
update?
up Josh's comment from 746. From 746. He says, I feel like everyone has forgotten and or written off the tech platform, which management has guided for an acceleration in 2026. It's been the most lackluster quarter, or lackluster segment, I should say. And it's been pretty much stagnant. But they said, hey, look, like this thing is like turning around a cruise ship. It takes time. and it's very slow. And 2026 is really when we can expect some big deals to come in. And I feel like that was a long way away when they said it, but I mean, it's not as long of a way away right now.
I don't care about the tech platform. Like, it's going to be great. I don't foresee it getting growth faster than 20%. And I think both segments at SoFi are going to do better than that. So it's not bad. It's not going to ever be negative to the business. But like, look at their job listings. They have not done a job listing in the United States for Galileo in a long time. I literally think their Galileo US clients might just be falling off or something. Like, I've got no clue, but they're just not hiring. It's every single job listing for Galileo is all in LATAM. There's still money to be made in LATAM, but I'm just worried about the existing client base that we're seeing at Galileo because, I mean, I don't know. There's obviously a lot of payment stuff, but it's hard to gauge what we haven't seen even an inkling of so far. So I hope to be wrong, but it's better to be conservative on things that you know nothing about, because then I can't be disappointed if in my modeling of the company's growth that I have, 15 to 20% growth, which is what I honestly do believe is going to happen.
Yeah, I mean, like it's still going to be the biggest lackluster segment. Like, let's not fool ourselves. It's not like, oh, Galileo is magically going to throw up growth rates that are higher than loan platform business. But it's not going to be no growth at all, is what I'm trying to say. It's just like, it's the cherry on top of the cherry of the massive cake that is the company prospects over the next 12 to 18 months.
And for Steve, that's why you're in the company, right? I think Rob pointed this out correctly. So
Yeah, I mean, I'm not too concerned about Galileo per se. I want to know about the RFPs because I want to see if the SoFi tech stack ends up powering some large financial institutions and regional banks, because that could be hundreds of millions or billions of dollars worth of annualized revenue in 5 to 10 years from now. So that has the potential to become a huge part of the business. It's very important. And once again, it creates another vertical that nobody else has in the sector.
yeah. Anything else that we needed to cover? We talked about the tech platform. We talked about LPB. Noto's tweets about the layer 1 blockchain. That was kind of interesting. So
I want to talk about Microsoft when we're done.
that's in the after hours.
Well, so we can leave Microsoft for after hours, but is there anything else that's fintech related that we can talk about for 7 minutes? Because we spent 53 on SoFi, which is warranted, but just asking.
Yeah, I mean, there's Robinhood thoughts that I have, just being, one of the greatest generational businesses that we're going to see, along with SoFi.
Did you see Vlad on the All In Summit? I was watching that, and I think, like, that's like, as a Robinhood shareholder and a BM&R shareholder, like watching him talk about tokenization in a more serious way. This isn't just ruminations of some CEO's like ideal situation. Like he wants to make this happen.
Yeah,
and they're fully intending on making it happen, and that I think is going to be really, really cool. Can you answer Real's question just before we move on?
Where? Sorry. How do you listen to the after hours show? So only members of the channel can listen to the after hours show. You have to be subscribed, and then there should be a join button that ends up appearing below. That will allow you to join the after hours show. It's about 30 to 45 minutes that we do every week. Yeah, it's $5 a month. Doesn't matter what channel you pick on. It's all the same show. We post it across Roy's channel, my channel, Tevis's channel. Yeah. And that's it. Okay,
so Tanner, are you buying more BM&R then? I know you're selling covered calls, but are you buying more?
Not currently at 67 because I know. So here's the thing.
67.
It's not at 67. BMNR.
No, it's 61. Holy shit! You gave me a heart attack for a second. I was like, what?
Wasn't it 67? Oh
No,
no,
I went to
sorry.
64 and then it jumped back to 61.
AO might be. But yeah, sorry. I am not buying right now just because the MNAV is expanding. But I do think that with these types of names that I would rather buy it cheaper at a higher price than it is today than the alternative. So let's say it goes to 80 right now or something like this, or 85, 90, and we're at a 2x MNAV. I don't want to buy that.
Yeah, but having a high MNAV gives them flexibility to buy more underlying Ethereum because they can just issue more.
Of course. I would rather buy at 90 at a 1x or a 0.9 MNAV than I would buy at 80 at a 2x MNAV.
That makes no sense, but okay.
Well, it's my margin of safety. Like, I don't know that they're going to get to 90. You would assume, you would hope that they get to 90, but we don't know that yet. So, like, you can assume that Palantir is going to get to $1 trillion one day, but I'm not going to buy it today because it's at 100 plus price to sales, as you said. So you have to price in the fact that there could be failure, that they don't end up achieving that the market ends up ripping them lower. So it absolutely makes sense. I'm going to be buying things that I think have higher guarantees than something at 2x the native asset that is purchasing. So, and plus, like that's just BMNR. There's a bunch of companies doing this. So right now, I'd rather buy like SBET or something like this, or one of the other treasuries to get cheaper, Ethereum, while still pecking, amazing management teams to play that out.
Have you noticed that the other treasuries are not getting the multiple?
I think SBET is going to be different.
I mean, I own it. I own that in Ether Machine.
They've got quite the C-suite.
I agree.
The co-founder of Ethereum.
I agree. That's why I'm in it.
Yeah.
Wait, which one?
SBET.
SBET? Yeah.
And so, yeah, that's the only thing. I get to pick between those, and but I'm super on the ETH train, and going to be buying a lot more. I think that it's going to get to a stupid percentage of my portfolio.
Ethereum directly or through the treasuries? Or both.
But yeah, through the treasuries right now is how I'm buying.
I am buying more ETH tomorrow or Tuesday.
I bought some more ETH like last week.
Just the coin.
Underlying, and also a shit ton of BMNR. Like BMNR is now, I don't know, like 5% of my portfolio, something like that. So yeah, very bullish on it. But again, I think I'm treating it more as a trade right now than I am as like a long-term hold, because I'm going to hold the ETH long-term anyways. So we'll see.
Yeah. Yeah, so I hope that BMNR, like it has previously, has a ton of volatility, and any time that it falls like, 8, 9, 10%, something like this, I'm going to buy big in on the dips. So yeah. Okay. Do you want to go into the after hours?
Yeah.
All right. Yeah, so you'll spend more money. I'm fully aware that I'm spending more. Like, I'm fully aware, but you don't know that BMNR at 80 is going to get to 90.
He's fully aware. He just doesn't care.
Yeah. Like,
he doesn't want to save money. He doesn't want to get a better deal. Don't worry about it.
Yeah, but
Yeah,
you,
this guy
if you end up
hates
going
making
into
money.
hard times, if you end up
He
going into hard
hates
times,
making money.
He
if you
just
end up
hates
going
it.
into hard times and the stock is at 80 and MNAV is at 40, then there could be a huge drawdown. Huge.
Sure.
Yeah. I mean, I
Okay.
think the real
I may not need to
through
see him
line
tomorrow.
the real through line here is that Tanner loves this job so much that he wants to do it for the rest of his life. And as a result, he just doesn't want to have deals that make him money because he just wants to keep working for you guys.
It is true. This is my favorite job I've ever had in my entire life.
It's a pretty good one.
It's a pretty good one. But ladies and gentlemen, that's been the SoFi Weekly.
I'm sorry,
Fintech
what?
Sunday.
I can't believe you just said that. I thought
Yeah.
you weren't allowed to.
We're getting a letter in the mail.
Yeah,
man.
I don't have a YouTube channel, so do not send me a letter.
It
Guys,
was
what happened to the SoFi Insider? That guy deleted his account. So I don't know. I think he got a letter. For real.
I mean, with some of the shit that he was saying, I'm not surprised. But anyways, neither here nor there. Let's go. After hours.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate
Tanner
your
doesn't
time.
like making money.
And bye for now.
No, he hates it.